So like Guerrero rightly said, you always start with the economic calendar, and there are quite a lot of reports coming out today, Tuesday, the 16th of November. So today, more than any other time, you need to be disciplined and be very cautious with your trading, because you find, there's various reports that can pull the market in either direction. Starting with 9:30, the consumer price index, which is a measure of inflation in Britain. And then you have a whole raft of reports coming out at 10 from the Eurozone. And then at 1:30, you have the US producer price index and ex-food and energy reports coming out at 1:30. Although these are all reports of medium importance, they could have an impact on the market. So again, like Remy rightly said, you have to be aware of them coming out and knowing that they could have an impact on the market. And then at 2 o'clock, you've got the long-term TIC flows. And at 2:15, you've got the U.S. industrial production. So up until 2:15 this afternoon, there are going to be reports coming out at different times of the day. Obviously, the major one is at 9:30, but you still have to be aware of the ones at 10, 1:30, 2, and 2:15. So as usual, you then have to decide how and when you're going to place your trades, because like I said, especially to keep it simple and especially for beginners, you only have 3 attempts at the market. You place your first trade. If it's successful, you stop trading. If your first trade is unsuccessful, you go on to trade number 2. If trade number 2 is successful, you stop. If trade number 2 is unsuccessful, you go on to the last trade, number 3. If that's successful, you stop. If it's unsuccessful, you stop. So it's now you deciding how to spread those possible 3 attempts at the market, given that all this are coming out today. So today, like any other, you want to make sure that, you use or take chances that will give you a good opportunity to make, either to make money or at least certainly not to lose, because the first goal of trading and money management is not to lose money. So you're trying to make sure you don't have unnecessary losses. So like I said, we'll go to the pound dollar, and like Rema rightly said there at the, Euro US dollar. We'll start with the Euro US dollar. So like Rema rightly said, at the moment there isn't any swing trading opportunities. Eventually the market falls all the way down here. You can sell at the 38.2% Fibonacci retracement. If it goes back up, you can buy at the 23.6% retracement. If you're using the moving average 50 to trade, you could have sold when it broke the moving average 50 there. By the moment, there aren't any good swing trading opportunities. Now coming to the 2-day 5-minute chart, I think you need to grade your level of risk, and because again, when you're trading, it's your money. There's complete independence when you're a trader. Again, that's the big attraction for trading. You don't have a boss. You are the boss. It's your money. It's your time. You can, decide how cautious or how risky you want to place your trade. So you make all those decisions yourself, and that's the beauty. No one tells you what to do. But I think the important thing is to be aware of the level of risks you're taking. Because as you can see here, the market, in essence, the Euro US dollar is trending sideways. And if we want to put our lines over the sideways trend, you can see here where it was initially fell, then was just going sideways. So we can put a line at the top here. So the high there is 13,6 13,686.8, so 13,687. And then the lowest point is at that point there. That's 13,560. Okay. So we can, in essence, just say the market is just hasn't got any real pattern between those two lines, so it's going in a sideways trend. Now, obviously, the safest trades to place would be outside this sideways trend. Those would be the safest trades to place. In terms of buying just above the first resistance at 13,697 and selling just below the first support at 13,506. Now, buying above the first resistance and selling below the first support will be the safest place to place your trade in view of the whole raft of reports coming out today, which we know can pull the market in different directions. So you know, again, no one knows what's going to happen in the market today. The market is going to do what the market is going to do. But we do know that there are quite a few reports coming out from Britain, from the Eurozone, and then in America. And, you know, they could pull the market in different directions. So with that in mind, you want to be careful, you know, up until 2:15, knowing that all these reports could have an impact on the market. So you want to steer clear of trouble as much as possible and make sure the market is trending before you get onto the market. So we can see here that, you know, if we can keep out of the trouble before 2:15, that would be good. And the best way is to place a safe order either just above the first resistance, well clear of the sideways trend, or just below the first support, well clear of the sideways trend. So that's the safest place to place your trade. Now you can say you could buy just above the high of today if you just want to concentrate on today's trading from midnight. So you can say, well, I can buy just above the high, that's 13,655.7, so that's 13,656. Or you could say you want to sell just below the lowest point of the market today. Now, doing that is more risky than using the first resistance and the first support using the pivot points. That carries more risk. And then again, you could say you want to buy just above the pivot point, you know, because again, still above the moving average 50, so you can buy above the pivot point, but that's very risky. So I think it's just being aware of the level of risk you're taking, and then you take that on board and then decide what level of risk you're willing to take. And remember, regardless of the level of risk you take, after 3 consecutive losses, you're going to stop trading. So you have to take all those things into consideration in terms of making that decision as to where you place your trade. So, you know, it's not a question of you shouldn't place a trade here. It's just it's a bit like having informed consent. You know, just be aware of what you're doing. So you know that if you buy here, you're taking a huge risk. If you take that on board, then fine, because you know there's a high chance that that could end up being a losing trade. Again, so you decide whether you want to take a huge risk, a minimum risk, a medium risk, or minimum risk here. Any trade you place, by the way, is always a risk. You know, let's get that fact out of the way. Any trade you place is a risk, because any time you place a trade, you have a 60% chance of losing money. Every time you place a trade, the chances of that trade being successful is about 40%, and the chance of that trade being a losing trade is 60%. So every time you place a trade, there's a higher percentage of you losing money than making money. So that's just a fact. Well, obviously, you can improve your odds on that statistic by, trying to, take all these things on board. So obviously, if you go for the pivot point, then, you're really shortening your odds. Again, we're not saying you're not going to, it could end up being a successful trade, but you're really taking a risk there, and the chances are low. The chances improve if you go above the previous high just from today, and the chances are slightly better in terms of odds if you go for the first resistance or the first support. And then you just decide which one you're happy to take between now and 2:15 in view of all those reports coming out. So I think that's the way to view trading. It's just you deciding what level of risk you're happy with. So I think it's not a question of, so there's no right or wrong answer when it comes to trading. It's just making sure you know the level of risk you're taking with a particular trade you're about to take, understanding the risk, understanding what you're doing, and obviously applying money management. I mean, if you choose you want to take all your 3 chances in terms of trading before the report comes out, then that's fine. But like I always say, the things you should never compromise on is applying good money management, making sure you risk the appropriate contract size for the amount of money you have in your trading account. You make sure you trade with stop losses. You make sure you don't overtrade. And you make sure you have a trading plan and be disciplined. So those ones, you are not, I think you shouldn't mess around with. But in terms of where you place your trades, how you place your trades, again, that's all up to you to decide. But the key is to be aware of the level of risk you're taking, and then just take that on board. Okay.